So how to invest your first £1 or £100 into the stock market? What are the things that I look at when I want to invest in a company? Welcome, and again, welcome back to my YouTube channel. My name is Gaiti Maimona. I'm 26 years old. I'm a Dutch citizen of Congolese descent living in London. Today we're going to talk about investing, because on this channel we talk about personal finance, but these couple of weeks I'm particularly going to talk about investing because that is my favorite topic to talk about, because that is the one that makes the most money. Well, not the topic, but just, yeah, investing in general makes more money than saving or whatever else there is in personal finance. Anyways, I'm going to talk about, really take you to let's say the beginner. Let's say for a beginner how it is for it to invest. Let's say if you want to invest one pound or even £100, I'm really going to talk about from, let's say, the beginning to investing your first pound or your £100. The first thing I'm going to talk about is, of course, what is investing, for those of you who have not really have seen my channel before or don't really know what I'm talking about. So yeah, I'm just going to shortly talk about what is investing. The second thing that I'm going to talk about is really just what are the different styles of investing. The third thing I'm going to talk about is basically the different instruments that you can use to invest, and then I will be talking about what basically how to invest your first pound or how to invest your first £100, and yeah, I'm basically just going to go through all of those topics for you, and so you can start investing like I have done, and as I've shown you also, I have made quite a lot of money with that. So yeah. So what is investing? Well, investing is really just the action of putting your money where your mouth is. No, I'm just joking. Investing basically is just the action of putting your money in a place that you expect for it to make more money in the future. So this money can be, let's say, a return of 1%, 2%, 3%, 4%, 10%, 100%, whatever it is. You're basically putting your money in a place that you expect that is going to make you more money in the future. So investing can be putting your money in a savings account that is actually also investing, although that is investing in cash. That is a very safe investment, but of course, if you make it a safe investment, then that also means that you're going to be making less money. But there are also more risky investments, like putting money in a business, putting money in a pension fund. Well, it's not really risky, but I mean, basically it's more risky than just holding cash. Putting money in a pension fund, putting money in the stock market, which is the main topic of today. That is basically what it is to invest. Is really just putting your money in a place that you expect is going to make more money in the future. So there are different styles or different reasons to invest. So there are people that will be investing on the shorter term, or people that will be investing on the longer term. Now, on the shorter term, that basically is, if you look at the stock market, for example, if you invest on the shorter term, you're basically going to be trading. Now, that is not really what we're going to talk about, because to be honest, I don't know myself much more about trading than you do, or well, maybe I will, but trading is not really my forte. I look more at investing on a longer term, and that is basically then investing, let's say, for dividends, investing for growth, which is basically the two main styles that I look at, or that people will be investing for. So investing for dividends is basically if you invest to replace your normal income, or even, well, maybe not, let's say completely, or you can also invest to replace maybe just a part of your income, or to just complement your income. Now, as you have probably seen from my previous video, if you haven't seen my previous video, go look at it. I am revealing basically my whole stock portfolio. But if you have seen my previous video, you have seen that I mostly invest more for growth, for value, which is the other style of investing. And that is basically putting your money in a company that you expect that is going to be growing exponentially in the next couple of years. As you have seen, I have made 100%, 200%, 300%, and even what I have seen now since this morning, actually I've made even 400%. So yeah, very interesting. Maybe maybe you can see it here or not yet. So I have made even 400% on my money very recently. But yeah, those are basically the different styles of investing. So you have dividends investing, but you also have growth or value investing. Now let's get into the nitty and gritty of stock market investing, which is what we're here for. And let's talk about what instruments are out there for you to invest in. Now there are really a lot of instruments out there. Instruments basically are things for you to invest in the stock markets. So honestly, there are companies, there are funds, there are ETFs, there are bonds, there are futures and all those things. Well, futures really just more on the trading part, but there are so many things that you can invest in a stock market. That really is a lot. Now, depending on your risk appetite, depending on how much money you're, let's say, willing to lose, you will be investing in one kind of stock or one kind of instrument instead of another. Let's say for someone that is playing it very safe, he will be looking more into investing for bonds. He will be looking more into investing for blue chip companies. He will be looking more to invest in, let's say, things that are very much established. Let's say like I said, like bonds, like let's say government bonds, which are kind of like the safest bonds that you can invest in, to be honest. Someone that is has a bigger risk appetite, like myself, will be investing maybe, let's say, in a quote unquote startup, let's say. Maybe not really a startup, but you know, the Teslas of the world, the Shopifys, the companies that are fairly new out there. I have invested also in Uber. I have invested in Canopy Growth, as I told you, is a MJ company. I have invested honestly in some companies that some people wouldn't even dare to look at, but I have a bigger risk appetite, and so I'm ready to, let's say, lose my money if things go, you know, to worse, but at the moment it's very much paying off. But yeah, so what you will invest in, what the different instruments you will be using or investing in will really depend on your risk appetite. So as I said, some people will be investing for dividends. So dividends will be more, let's say, into blue chip companies, like the Microsofts of the world, the Apples of the world, the Coca-Colas and all those things. So those companies are way more established. That's what a blue chip company means. Those companies will be more interesting for people that have a, let's say, a lower risk tolerance than a person like myself, for example. I do like dividends. I'm not saying that it's not good to have dividends or that it's not sexy to have dividends. It's always good to, you know, to have something like that that gives you a dividend on a monthly basis, quarterly basis, half yearly basis, whatever it is. But it's always also good to look at some companies that will actually make you a lot of money in the longer term. A funny thing actually that I read the last time was, if you invested, for example, £1,000 in Amazon in 1998, I think that's when they went public. If you invested, let's say, £1,000 in 1998, you probably would have had a million right now. Those are the kind of like companies that I look into to invest in. Companies that really are undervalued and that can actually make a lot of money in the long run. As I said, I'm investing more in the long run. Like I look more at a 5 years or 10 years perspective, and not really at a less than a year perspective, how like traders usually look at. So how to invest your first £1 or £100 into the stock market? Well, first, actually, let me talk to you about the available apps that are out there for you to do so. You can do so for free. There are really so many apps out there that you can use for you to trade, for you to invest in the market. So yeah, honestly, look for those apps. There is Freetrade, that is my main brokerage app that I use at the moment, although I am looking to maybe move that over to Trading 212, which is another app also that I use, not mainly, but I use it also, which is also completely free. But anyways, that's another topic for another time. So yeah, no, there are many apps out there. If you're in the US, you can use maybe Robinhood. If you are maybe in Europe, there are also, you can also use Revolut for you to invest also in the stock market. In Canada, I know that there's, I think it's Wealth Simple or something like that. Like, there are honestly many apps for you to use to invest in the stock market, which you can use for free, and you can also invest in a fractional way. Like, say for example, if you want to invest in Tesla at the moment, which is trading at, I think at the moment is at $1,300. If you don't have $1,300, well, you can still invest if you wanted £20, for example, because you can also get maybe just a part of a share. Anyways, I am digressing. So how do you invest your first pound or your first £100? Well, like I'm basically saying already since the beginning of this video, everything will depend on your risk appetite. Everything will depend on the style that you want to invest for. Everything really will depend on yourself. If you want to invest, let's say, to have dividends, and maybe let me explain a little bit what dividends are. Dividends basically, well, no, actually, let me take it back to the beginning. Say if you invest in a company, well, that gives you actually a part ownership in a company. If I put £20 in Tesla, that means that I own £20 of Tesla, and I'm a owner of £20 of Tesla. Basically, I'm a part owner of Tesla. That also means that I can participate in the revenue that they get, in the net income that they get, and that means that I can also get some money at the end of a quarter, at the end of a half year, or 1 year, maybe, however they would, however a company would declare their dividends. So I would have to look for a company that does pay dividends, because Tesla doesn't pay dividends, but let's say Coca-Cola. And if I want to see when they will pay those dividends, well, I would have to look for the ex-div date, which is basically the last day of the stock without dividends. And they will declare then when they will also pay the dividends, but you have to own then the stock also before that ex-div date. Anyway, so how you will invest your first pounds, your first £100, really will depend on what it is that you're looking for, what it is that, how I mean, let's say the risk appetite that you have, how big it is. Sorry guys, I had to interrupt myself there because I've just reached 100% return. This is the milestone that I was waiting for, but yeah, let me get back to the video. So what are the things that I look at when I want to invest in a company? And when I want to invest in a company, really, I look at very different factors. I really just look at a company from different perspectives, and I try to understand the company. So the first thing, of course, is, do I know the company? Do I like the company? Do I understand how they make money? If I understand how they make money, if I like the company, if I know the company, well, this will bring me a step closer to investing in this company. I really first need to understand first how they make money. If I don't understand that, well, I'm not even going to look further into investing in this company. I need to understand, how do you make money? Yeah, once I understand how a company makes money, if I like the company, if I know the company, etc., I will basically be looking at what are the future plans of a company. What is it that they're planning on doing for the next year, for the next 5 years, 10 years, however long it is. And I really try to see, well, are there any innovations that are planned? Are there any rumors that we hear about that they're maybe going to go into a new market, or some new product that is going to be launched, whatever. I just need to know, what are the plans for the future? Are there any innovations, or are they pretty much going to stay the same over the next couple of years? If they're going to stay the same for the next couple of years, well, I'm probably going to be looking at, well, do you pay a dividend? If they don't pay a dividend, I'm probably not even going to look at this company. If they do have big plans for the future, well, that's when I'm really going to be looking at, okay, well, is this company going to be able to double my money, triple my money, quadruple my money, whatever it is, in the next couple of, well, 2 years, 3 years, 4 years, 5 years, or even 10 years. So when I have seen all those things, let's say on the one side, he has, the company has projects, and there's opportunity to 2x your money or 3x your money, or maybe they don't have any projects, but they do pay dividends. Well, I'm going to be looking at these ratios right now. So there are mainly, let's say, well, it's basically 6 ratios that I look at. The debt ratios that I look at are the current ratio. So the current ratio is whenever you look at a balance sheet of a company, you have the assets, you have the liabilities. When you look at the current ratio, basically you look at, well, let's say I have current assets, which is basically like assets that are very, I would say, more liquid than the other type of assets. You divide that by current liabilities. So current liabilities are debts that companies have that they have to pay in less than 1 year. I will check basically, let's say, if everything would go to, to do, will they be able to survive in that situation? Will they be able to pay their debts back? Once I have seen that, and it's at a good level and at an acceptable level for myself, well, I look at debt to equity ratio. So, and at that point, basically, I'll try to see, well, for every pound that I put in a company, how much debt am I also taking on with me? And that's really also, again, something that's very important for myself to see, basically just to see, again, will companies be able to pay their debts if everything would go to doo-doo? And the other actually is then also a variable actually of the current liability, well, the current ratio, sorry, that is the quick ratio. So the quick ratio is actually even a more restrictive version of the current ratio, where you basically just see, well, what is the level of cash that a company has divided by its current liabilities. And that's really just to see, again, if everything goes to doo-doo, will the company be able to pay their debts back and without even selling off their stock, or knocking on people's doors and asking for their money back, or whatever it is. So just basically try to see, well, how are the debt levels of a company. Then I try to also look then at valuation ratio. So the first one that I will be probably looking at is the EPS, so that is the earnings per share. I try to basically just see, well, for every pound that you put in, well, how much money is the company also just having as a net income, basically. And that is really just to understand. I try to see, when I look at the EPS, I try to see basically just how it has also evolved over the couple of years. Has the income been decreasing or increasing? So that is very important for myself to look at. Another one is then also the PE ratio. So the PE ratio is actually then the price to earnings ratio. The EPS is the earnings per outstanding share that is out there. The PE ratio is the price of the share right now divided by its earnings. So if you look at that, it's basically just to see, well, for the level of earnings. No, let's say, sorry, for the price that a company is trading at right now, does it make sense given their level of earnings? Is really just to see, is a company basically overvalued? Is it undervalued? Is it rightly valued? So of course, whenever you're looking, for example, for a growth stock, you want to have a company that is undervalued, or maybe that is even rightly valued. But I mean, that I've never seen that in my life. I don't think that never actually happens, basically. Another thing also that you would have to look at if you're looking at a growth stock is the forward PE ratio. Now the forward PE ratio, you have to take it with a pinch of salt, because it's sort of a biased ratio in a sense, because it is based on estimated sorry, the word I'm losing right now. On estimated earnings in the future. So I mean, it's something that is interesting to look at, but I wouldn't base my decision completely on that ratio. But it's still interesting to look at, to see basically, in the future, are they going to, do analysts think that they're gonna make more money, and then compare then to the price that they're trading at right now. Is it an interesting stock to go into, or is it maybe less interesting to go into? Now, again, the forward PE ratio is biased, so take it with a pinch of salt, please. Don't completely base your decision, your buying decision on that ratio. As I said, do look at all the ratios, at different aspects. What are the projects, and do you actually believe in this company? So those are the things basically that I look into when I want to invest in a stock. And that is basically, yeah, that's actually the end of the video. So I've kind of explained, you know, everything that you need to know if you wanted to invest your first pound, your first 100 pounds in the stock market. There are different things that you need to look into. You have to basically know what your goal is, and then you have to look into basically, you know, if you like the company, if you like maybe also the funds, if you, whatever it is that your goal is, you will have to take different aspects into consideration before you actually go into a fund or stock or bond or whatever it is that you will be buying. Anyways, as I've always said, please do like, comment, and subscribe to my channel if you haven't done that before, because I'm trying to reach 500 subscribers by the end of the year. So please do help me get to that number, because I want to get this financial education to more and more people out here, and really want to help. Well, as I said already in my previous video, I would like to primarily help my, you know, people like me, but of course, you know, I know that also a lot of other people will be watching these videos, and again, I don't really mind, but yeah, it's really just to help people my age, people that are like me, people really just that, listen, I'm just trying to help here, you know. So yeah, anyways, that was all for me, and I thank you again for watching this video, and I'll see you the next time. Peace, guys. I'm out.